Everyone, welcome to India Now. Let's cut across to the conference call where the Tata Steel-Thyssenkrupp merger has finally been confirmed. Koushik Chatterjee speaking.
Our external debt of about 2.5 billion euros into the joint venture company, and with identified synergies of 400 to 500 million euros, this makes the credit profile of the joint venture very healthy. The transaction capital structure, as I mentioned, is framed to ensure a strong and sustainable financial foundation, and that will help in facilitating the implementation of the joint venture strategy and create value for all stakeholders. The joint venture will be managed as one company through a holding company headquartered in the Amsterdam area, and it will have, as per the laws of the land, a two-tier governance structure comprising a supervisory board and a management board. Both partners will have an equal representation in the boards. Until closing, the ThyssenKrupp Steel Europe and Tata Steel in Europe will continue to operate as separate companies and as competitors. Only after closing, ThyssenKrupp Steel Europe and Tata Steel in Europe will be integrated as one company. I would also like to make a few specific comments in some of the media reports happened over the last night. This joint venture is, as I mentioned earlier, a 50-50 joint venture and not a 45-55 joint venture as reported in some parts of the media. Only at the time of the IPO, based on the affirmative right that ThyssenKrupp has, the JV company will issue warrants that will convert into equity, and effectively they would have the first 10% monetization right, and the market will pay for it. So the governance of the company will be on a 50-50 basis, including representation on the boards. The synergies we've talked about, and you would see it in the presentation, of about 400 to 500 million, has been arrived post the due diligence and framed by the clean team of both companies along with advisors as part of the joint business plan, which largely refers to cost synergies, procurement synergies, overheads, and better asset utilization network. I would also like to mention that the long process of multi-jurisdictional consultation in the UK and in Netherlands and in France, in our case, has been completed successfully, and therefore there are no such conditionalities in the joint venture. From a Tata Steel point of view, it obviously creates a sustainable footprint in Europe. The combined synergies has a huge value potential, and on deconsolidation, the Tata Steel balance sheet effectively reduces its debt profile by roughly about 2.5 billion euros. That's primarily the deal structure. I would like to request Naren for his comments.
Yeah. Thanks, Koushik. I think Koushik has explained the context and the transaction. All I want to say before we open it up for questions is that this is another step forward for us to create two structurally strong businesses. In India, we've always been structurally strong, and with the recent acquisitions and the expansion in Kalinganagar, we are setting ourselves up well for the growth opportunities in India. In Europe, with this merger, we are creating a structurally strong business, which is self-sustainable, and that is very important. Thyssen is also a technology leader. Tata Steel Europe also has made a lot of headway in providing quality products to discerning customers. And we believe this partnership will help us serve our customers in Europe better and be more ready for the kind of demands that the customers will have in terms of technology and R&D and the investments that we need to make there. So, in essence, Tata Steel today, I think, has moved another step forward to creating structurally strong businesses into important geographies. With this, I hand over to you for the question and answers. Yeah.
Thank you very much.